Hirachand Govardhan Bhai was a village school teacher belonging to the Baniya community, staying in Junagadh, Gujarat. Hirachand belonged to the typical middle-class Indian family and he had a loving wife and 5 children, 1 daughter and 4 sons. The second son of Hirachand was named Dheeraj Lal and he was born in 1932. Although Dheeraj Lal was the son of a teacher, he showed little interest in studies and formal education, but he grew up to be a street-smart and hard-working young man. So in 1949, Dheeraj Lal migrated from India to Yemen to try his luck in a foreign land. And in 1958, after staying in Yemen for almost a decade, Dheeraj Lal came back and set up a partnership named Margin with his second cousin. And together they started importing polyester yarn and exporting spices to Yemen. And by 2002, this company had expanded into a $15 billion conglomerate. This was the story of a man named Dheeraj Lal Hirachand, who you may know as Dhirubhai Ambani, and the company was none other than the Reliance conglomerate itself. The legacy of Dhirubhai Ambani was carried on by his 2 sons, Mukesh and Anil. Mukesh Ambani is one of the richest people in India today, while Anil Ambani, once one of the richest men in India with a net worth of $42 billion, claims that his net worth is zero and that he is going to file for bankruptcy. And he also has multiple ongoing legal proceedings against him in different courts across the world. So what went wrong? How did Anil Ambani manage to lose all his wealth? And what did Mukesh do differently to go in the exact opposite direction and become the richest man in India? Well, to answer that question, we need to dive into the story of the Ambanis. Dhirubhai Ambani had 4 children, out of which the elder son, Mukesh, was born in 1957 while Dhirubhai was still in Yemen. And the younger son, Anil, was born 2 years later in 1959, a year after Dhirubhai was back in India. Mukesh graduated from St. Xavier's College in Mumbai as a chemical engineer, while Anil completed his MBA from the coveted Wharton School of the University of Pennsylvania. Both the brothers were inducted into Reliance when they were 24 years old, Mukesh in 1981 and Anil in 1983. However, this was also when they took different paths right from the beginning. So while Mukesh joined in as a hands-on facilities manager, Anil came in as an executive, dealing with the press and investors, and their father thought that their roles suited well to each of them. So while Mukesh liked to maintain a low profile, highly focused on his business and his family, Anil liked to indulge in a more extravagant lifestyle. He socialized with Bollywood actors and enjoyed the spotlight and stardom. And of the two, Mukesh actually played a much larger role in making Reliance what it is today. Remember here that Dhirubhai started with the trade of yarn. If you do not know, yarn is essentially a long, continuous length of fibers that are interlocked or twisted together. But Dhirubhai was clearly a smart man who had the eye to spot opportunities. And he realized that to truly rule the textile industry, having a command of yarn alone was not going to be enough. So company-wide, he started an initiative of vertical integration. Vertical integration basically means a model where the same company owns all ends of the supply chain. And this is how the supply chain works in the textile industry. Petrochemicals are used to make polyester fibers, which are like long strands of thin threads. These fibers are then used to make yarn, which is essentially a long continuous length of fibers that are interlocked or twisted together. Yarn is then used to make textiles, which are basically pieces of cloth or fabric. By 1980s, Dhirubhai had a good command of the trade of yarn, but now he wanted to get into petrochemicals as well. So in 1981, when Mukesh was in the middle of doing his MBA from Stanford, Dhirubhai called him back to India and he started working at Reliance. But shortly afterwards, in 1986, Dhirubhai Ambani had his first stroke. Fearing for his health, Dhirubhai handed over the control of Reliance to his sons, Mukesh and Anil Ambani, in 1986 itself. So all the responsibility of this new petrochemical division fell on Mukesh. And Mukesh was spectacularly successful, as he gradually grew the petrochemical division into a multi-crore enterprise, with the highlights being the commissioning of the Hazira Petrochemical Plant in 1991, the acquisition of Indian Petrochemicals Corporation in 1998, and in the same year, making the world's largest refinery in Jamnagar, Gujarat. As of today, Reliance Industries Limited, the division of Reliance Group under which lies the petrochemical and allied business, is a Fortune 500 company and the largest private sector corporation in India. But Mukesh's innovation did not end here. In 2002, Mukesh took one step further in turning Reliance into a true conglomerate when he established Reliance Infocom and entered the telecom sector. Reliance Infocom was one of the leading telecom operators for several years. And if you're someone born before the mid-90s, you would remember their iconic ads and tunes as well. And all this time, while Anil Ambani did contribute to the growth of petrochemicals and telecom and all the other initiatives, it was clearly Mukesh who spearheaded the majority of these ventures and knew the core business inside out. Anil, on the other hand, was known for his ability to connect with investors and stakeholders. He was the face of the company in investor meetings and public addresses. And then tragedy struck in 2002. Dhirubhai Ambani suffered another stroke and unexpectedly passed away, unintentionally committing a major blunder in the process, not leaving behind a succession plan. Initially, the two brothers managed to continue running the company together, Mukesh as the chairman and managing director, and Anil as the vice chairman of the group. But both brothers were clearly different in their own ways, and Reliance was turning into an empire that could not have two separate heads. So in the lack of a clear will or succession plan, a scuffle broke out between the two brothers. Eventually, in 2005, their mother Kokilaben Ambani stepped in and brokered a deal between them. The Ambani empire was divided into two. While Mukesh got the old economy sectors of oil, gas, petrochemicals and refining, Anil got the sunrise sectors or upcoming areas of telecom, electricity and financial services. As a part of the deal, the brothers also agreed that none of the two will start a new company in the other sector for a period of 10 years. It was widely speculated that Anil Ambani got the better part of the deal, since he got the sunrise sectors that was set to boom in the coming years. And he was expected to eventually surpass Mukesh Ambani in terms of net worth as well as overall success. And this did happen to some extent. Shortly after the split, Anil Ambani went on an expansion spree. In 2005, he acquired a majority stake in Ad Labs Films and their chain of theatres, eventually renaming it to Reliance Media Works. By 2008, Reliance Media Works had become the largest multiplex chain in India with more than 700 screens, which you might remember as big cinemas. Anil Ambani also started tightening his hold in the telecom sector, renaming Reliance Infocom to Reliance Communication or RCom. By the time the split happened and Reliance Infocom came under Anil Ambani, it was already on its way to becoming a market leader in India because of its disruptive strategies. By 2008, RCom was one of the largest mobile network operators in India, and Anil Ambani himself was the sixth richest man in India with a net worth of $42 billion. But still just behind Mukesh Ambani, who stood as the fifth richest man in India with another $1 billion to his wealth. The charisma of Anil Ambani was such that the IPO of Reliance Power in 2008 was fully subscribed to in just 60 seconds of going live, the fastest subscription till that day in the history of the Indian Stock Exchange. But unfortunately, this was also when things started going downhill for him. The problem actually started with the most promising part of his business, RCom itself. When RCom was at its peak, Anil Ambani realized that 3G was the upcoming wave in India. And in order to maintain his company's position at the top, he needed to hop onto that bus. The hope was that 3G would be the driver of the next wave of revenue growth for telecom companies, with expensive 3G data services leading to a higher average revenue per user. So with its aggressive approach, Anil Ambani managed to win the bids in the 3G spectrum, but at an astonishing price of $2 billion. And obviously, RCom did not have this sort of money just lying around in their bank accounts. So they had to finance a major chunk of this through debt. However, in the coming years, RCom's revenue did not grow as per the expectations. So instead of seeing an increase in revenue and profits as per his expectations, Anil Ambani saw an increase in debt, interest payments and operational costs. And in order to reduce this debt, Anil Ambani decided to take on even more debt. In 2012, he raised an astonishing $1.2 billion as a loan from three Chinese banks: the Industrial and Commercial Bank of China, the Exim Bank of China, and the China Development Bank. And the debt load was temporarily reduced for RCom. But still, by this time, RCom had clearly already started on its downward spiral. However, at the same time, Mukesh Ambani had actually started doing really well. He had continued to strengthen his foothold in the petrochemicals and refining business. In 2007, he also launched Reliance Retail, which would later go on to expand into segments like groceries, electronics, and apparel. In 2008, the Jamnagar refinery owned by Mukesh became the largest refinery in the world. By 2012, Mukesh had moved into Antalya, one of the most expensive private residences in the world. It was a 27-story building complete with a 50-seat movie theatre, a garage with a capacity of 168 cars, 9 elevators, and a literal snow room that spits out snowflakes from the walls. It is estimated to have cost upwards of $1.2 billion. So Anil was starting to lose the race of the Ambani brothers, while Mukesh was seemingly shifting gears every year. Over the next few years, Anil Ambani's debt continued to compound and increase as Arcom faced stiff competition in the market. But the final nail in the coffin came in 2016. Remember that as per the agreement brokered by their mother Kokilaben, neither of the two was to enter the other sector for a period of 10 years. And this 10-year period ended in 2016, after which Mukesh Ambani immediately launched a company that would drive his brother's company into the ground and change the face of the entire telecom industry in India forever. Jio. Jio entered the market with a disruptive strategy. They started offering everything literally for free. You could get a free SIM with unlimited calling, unlimited SMS and unlimited data at no charge. Where Airtel, Vodafone and others were charging roughly Rs 250 for just 1 GB of data, here was Jio offering it literally for free. It was like an apocalypse in the telecom sector where only Airtel survived. Vodafone and Idea were under so much pressure and debt that they had to merge to form VI, and smaller companies like ASL simply shut down. And one of the casualties of this disruption was Anil Ambani's Arcom. By 2017, Arcom was in a debt of more than $6.5 billion. And where giants with deep pockets like Vodafone and Airtel struggled, Arcom definitely could not survive. During this time, it was unable to pay the dues of its suppliers and vendors, with the company Ericsson taking it to court as well over unpaid dues. In this case that was quite publicized, the Supreme Court had ordered Anil Ambani to immediately pay an amount of $80 million that was due or go to jail. But he did not have even $80 million. And when it was almost certain that once the second richest man in India would go to jail over non-payment of about 450 crore rupees, it was Mukesh Ambani who swooped in at the last hour, gifting the amount and saving his brother from going to jail. It was seen as an act of brotherhood as well as an act of protecting the Ambani name, and it got a lot of media attention. However, Anil Ambani later revealed that the funds were not provided by Mukesh Ambani in a personal capacity, nor was it a gift. Arcom had raised the money from Reliance Industries by leasing its corporate assets in a corporate transaction. In any case, in a span of just 3 years, Arcom lost over 97% of its market value. Finally, in 2019, the company officially declared bankruptcy and opted for insolvency proceedings with $7.7 billion in debt. In the process, Anil sold all his other profitable companies to manage the debt of Arcom. He sold Big Cinemas to Carnival Cinemas in 2014, Big TV DTH and Big FM to Zee in 2016, and finally Reliance Energy, its last profitable business, to Adani for 18,800 crore rupees in 2017. His last company, Reliance Capital, is also on the verge of closing, with a market cap of just 240 crore rupees as of this month. But Anil Ambani's troubles did not end there. See, a company is considered a separate legal entity, and the employees of the company or its shareholders or even the owners are not usually liable to pay back any liabilities of the company. So when Arcom declared bankruptcy, most of the lenders could not simply go after Anil Ambani's personal wealth. They had to wait and see what they could recover from Arcom's remaining assets only. However, Anil Ambani committed one mistake while acquiring one of these loans. Recall that he had raised about $1.2 billion in 2012 from 3 Chinese banks. And while raising this money, Anil had provided a personal guarantee, meaning that he had pledged his personal assets as well against the loan. So even though Arcom was gone, the 3 banks could still extract the remaining amount of about $700 million from Anil's personal fortune. They dragged him to a court in London, and in 2020, Anil Ambani made the claim that made headlines across the world. The man whose net worth was once $42 billion said in court that his net worth was now literally zero. But was that really the case? At this time, it seemed like Anil Ambani still had a lot, including a fleet of luxury cars worth about $3 million, a luxury yacht that he gifted to his wife worth $56 million, his house, his helicopter, and even his private jet. So how was he claiming to be bankrupt? Well, Anil Ambani said that most of these were either owned by his remaining companies as corporate assets or owned by his son or wife or mother. He said that he had to sell all of his jewelry just to pay the legal fees of these proceedings, and that his daily expenses were being borne by his wife and son. While this excuse may have worked in court, no one really knows what the true net worth of Anil Ambani is today. Some claim it could be thousands of crores of rupees, as he still has his house, cars and whatnot, with allegations that he has also hidden a large chunk of money in Swiss bank accounts. But irrespective of his present fortune, it is safe to say that the sun has finally set on his sunrise empire. While Mukesh Ambani continues to be one of the richest industrialists in the world and the richest man in India. So what can we learn from this saga? Well, firstly, it is that diversification is a double-edged sword. Over-diversification without having a core competency can be detrimental. Notice how Mukesh Ambani stayed in the core business of petrochemicals and refining for several years before making a foray into retail and then Jio. Unlike Mukesh, Anil never had a core profit-generating business that he could fall back on in case things went wrong. Secondly, it is debt management. While it always looks so obvious in retrospect that people like Anil Ambani or Vijay Mallya should not have taken so much debt to begin with, it is very easy to fall into a debt spiral. Large companies need debt, and all of them always have a certain healthy amount of debt anyway. But regularly assessing your debt and having a long-term vision in mind is extremely crucial to avoid going into a spiral. And finally, as an investor, you should always be careful about a company's debt to equity ratio, which is an indicator of how much debt a company really has. I have added an excellent article on how to read a company's debt to equity ratio in the description below. Do check it out. And while you are there, follow me on LinkedIn as well. I hope you liked this video. Please hit the like and subscribe buttons below to make sure this video reaches more viewers like you. Let me know in the comments which story you want me to cover next. Until then, goodbye.